How can you guarantee that this exit of the sovereign economy of the dollar, of fiat-based system, Bitcoin, will outlive you, will allow you to pass it on to generations? If it's 10 Bitcoin in premium, it's 1 Bitcoin a year for 10 years. If it's 5 Bitcoin in premium, it's 0.5 Bitcoin a year. The question is then, well, which Bitcoin, if you have all these different vintages, all these different prices, all these different cost bases, which Bitcoin are you going to sell? You can borrow up to 90% of the surrender value, so it's like a 90% LTV loan. You might get a policy on a child. It's not about the death benefit when you do that. It's about the tax-free policy loan. You're borrowing from yourself, your loved ones, your family, whoever your beneficiaries are. You're not borrowing from an exchange. You're not borrowing from a lending desk. You're not borrowing from an insurance company. And so while we're not giving tax advice and I'm not telling you yes or no, there is no clear guidance from the IRS whether paying your premium in Bitcoin-denominated life insurance is a taxable event. We're the only company that does it. This is a logical next conversation because this is all about how does your Bitcoin outlive you? How does your Bitcoin pass on to the next generation? We're all going to die. We have Bitcoin, a lot of us in self-custody. You get hit by a bus tomorrow. Do your loved ones know your private keys, passwords, seed phrases, all the above? Maybe your spouse does, but what if you're both in the car together? Do your kids? Do your other family members? How can you guarantee that this exit of the sovereign economy of the dollar, of fiat-based system, Bitcoin, will outlive you, will allow you to pass it on to generations? Well, the answer is Bitcoin life insurance. Everything in life insurance is about passing on assets to your family, to your loved ones. And the beauty of life insurance is that it's all tax-free. The government has created life insurance with all these tax incentives to get you, if you can afford it, to buy life insurance. The assets grow tax-free. You can borrow against a whole life policy tax-free. You can pass on the assets to your family one day completely tax-free. The only problem is that it's all dollar-based, and the rate of inflation is eating away at all your benefits. I've been in crypto since 2013 when I first bought Bitcoin. I'm married, I have kids. One of the anxieties that you have when you're an early Bitcoiner is if I get hit by a bus, will my wife be able to figure out where all the Bitcoin is, how to use it, how to monetize it? Kids are expensive, their nursery schools are expensive. She's going to need these assets. And if I get hit by that bus, there's no way. I'm the crypto geek in my family. She is not. She's not going to figure it out. I've created a treasure map, literally a handwritten piece of paper with 45 different steps of what to do, like self-custody Bitcoin monetization for dummies. But even that is not a perfect way to guarantee my Bitcoin outlives me. And so I discovered Bitcoin life insurance in 2024, and it blew my mind. Literally, my jaw hit the floor. I instantly got my own policy. It's basically all the tax advantages of life insurance wrapped around your Bitcoin to guarantee that your Bitcoin will outlive you no matter what. And you're going to leave your family more Bitcoin than you ever had to begin with. Life insurance in general, $100,000 of premium might pay $500,000 in death benefit. How does $100,000 become $500,000? Through yield. Bitcoin, 10 Bitcoin in premium might pay 20 Bitcoin in death benefit. How does 10 Bitcoin become 20 Bitcoin? Through yield. You can literally increase the amount of Bitcoin you have through life insurance. And that's what I'm here to talk to you about today. My company is Meanwhile, and you might recognize some of these names that back us. But essentially, we are a life insurance carrier, just like every other life insurance carrier. We're based in Bermuda, like so many other insurance companies. And the only difference between them and us is that we are fully on the Bitcoin standard, where Bitcoin is our functional currency, where everything we do is in Bitcoin. You go to our website, you click the financials, you'll see that we have our audited, externally audited financials are a table of numbers, assets and liabilities with B's in front of each number, not dollar signs. We measure everything in Bitcoin. 1 Bitcoin equals 1 Bitcoin. There's no such thing as a cost basis for us because Bitcoin's our currency. And so in order to understand what Bitcoin life insurance is, where your premiums and death benefit and policy loans are all in Bitcoin, it helps to talk a little bit about traditional life insurance for those who might not be totally familiar. What we offer is a whole life policy. And what that means in the traditional world is you go to a carrier, you say, I want $1 million death benefit policy. They'll say, great, we'll crunch some numbers based on your age, your health, your sex, and they'll dictate to you an amount of premium that you must pay in dollars, either every month or every year. And that premium payment has baked in fees and expenses in it. And it goes in whole life into a mutual fund, an investment account with a guaranteed growth rate of about 4% or so. And that grows over time, and in time, you can borrow from it tax-free, meaning that 4% every year, maybe it's up 30% after a couple decades. You can borrow money out if you need a down payment on a house. Let's say you borrow $100,000 out of your policy. You never have to repay that loan. You don't have to pay the capital gains on that 20 or 30% appreciation because it's life insurance. And your death benefit will just net down from $1 million minus $100,000 to $900,000. That's how traditional life insurance works. We do that in Bitcoin, except what that means is we had to change a couple things around because Bitcoin is a scarce asset with finite supply. So you can't come to us and ask for $1 million policy, or we'd say a 10 Bitcoin policy, because what that would mean is we have to then tell you how much premium you have to pay in Bitcoin. The only problem is we don't know how much Bitcoin anyone has. We can't say, oh, you have to pay 8 Bitcoin in premium, because you might say, what are you talking about? I only have 5 Bitcoin. So instead, you come to us with an amount of Bitcoin that you know you have, and you say, I have this amount of Bitcoin, what do I get for it? I want to use it as premium. Well, we will then crunch numbers based on your age, your health, your sex, and whether you're a smoker, and we'll give you a death benefit ratio that you get relative to the amount of Bitcoin premium that you want to pay. All of our policies are paid over 10 years. It's called a 10-pay. And you pay in equal annual installments. If it's 10 Bitcoin in premium, it's 1 Bitcoin a year for 10 years. If it's 5 Bitcoin in premium, it's 0.5 Bitcoin a year for 10 years, regardless of the price of Bitcoin. Because remember, 1 Bitcoin equals 1 Bitcoin, so it doesn't matter what the price is doing. You might say, okay, today Bitcoin's at $95,000, so if I pay 1 Bitcoin, it's $95,000 of annual premium. But next year, Bitcoin might be at $200,000, so now my premium just doubled? Yes, in dollar terms, but so did your death benefit. If your death benefit was 20 Bitcoin, then that 20 Bitcoin's dollar value also doubled. Stop thinking in dollars for the rest of this talk and really start thinking in Bitcoin. So everything's in Bitcoin. Premiums, loans, death benefit. We never sell. There's no dollarization, realization, indexing to the dollar. Everything is in Bitcoin at our company. And so this is, for example, a 35-year-old healthy non-smoking male approaches us with 10 Bitcoin they want to use as premium. They get 18 Bitcoin in death benefit. The younger and healthier you are, the bigger the death benefit, of course, because you're young, you're healthy, and there's many more years of life expectancy for us to grow your Bitcoin, to get yield in your Bitcoin. The yield we give to every single policyholder, our guarantee is 2% per year, every year in Bitcoin-denominated terms. 2%, yeah. But then you have to ask, where the hell does the yield come from? Because that's the downfall of most crypto companies, or just most companies ever in the financial system, is they're going to take your money and multiply it. Well, they're probably going to lose it somehow at some point. BlockFi, Celsius, Voyager, Gemini, Genesis, you name it. They've all blown up. And so how do we get yield? Well, we're a highly regulated, very conservative, risk-averse life insurance company. We have to be around for a very long time. Our liabilities are so long dated. I mean, we have 20-year-olds with policies. They're not going to die for 70 years. So we have to be around for generations, centuries. So how do we get yield without blowing up a company, without even risking the potential of a blow-up? We've actually solved a problem for low-cost basis Bitcoiners. Think Bitcoin miners, for example. You've been mining Bitcoin for years. You have a lot of different vintages, prices that you mine your Bitcoin at, $100, $1,000, $20,000. Today, the price of Bitcoin is at $95,000. If you're a miner, your revenues in Bitcoin, your capex is in fiat, meaning the electricity costs that you have to pay to run your operations That's in dollars, not Bitcoin. Rent, where you warehouse all your ASIC machines, that rent payment is in dollars or in fiat, not in Bitcoin. So you get Bitcoin revenue, you have dollar capex, so you have to go from Bitcoin to dollars. How do you do that? Well, there's two ways. You either borrow against your machines with your ASICs as collateral. These loans are expensive, they're 10 to 20+%, or you just sell Bitcoin. It's much easier to sell Bitcoin. The question is then, well, which Bitcoin, if you have all these different vintages, all these different prices, all these different cost bases, which Bitcoin are you going to sell when you have to pay your monthly rent or whatever it might be? Well, obviously, they have to pay capital gains like the rest of us, and so they're not going to sell Bitcoin they mined at $1,000 today, because the capital gains tax on $94,000 of appreciation, north of 20%, is non-economic. Your CFO, your treasurer, is not going to want you to pay that much in taxes. They're going to want you to sell the Bitcoin you mined today, yesterday, last week, last month, closer to today's market price, not the low-cost basis Bitcoin. So what do you do with all that low-cost basis Bitcoin? Well, literally nothing. It sits in your wallet because your CFO and treasurer is not going to allow you to accidentally incur a taxable event. And so it's just sitting there. Well, until the life insurance company in Bitcoin rolled around, where we don't have a cost basis. So we can allow you to swap your low-cost basis Bitcoin with our Bitcoin in the form of a one-year repo or a repurchase agreement. Meaning, miner approaches us, sends us 100 low-cost basis Bitcoin that's pretty useless to them. We send them back 100 Bitcoin. That assumes today's cost basis. That's how a repurchase agreement works. One-year term. We charge them 3.5% upfront. So really, they send us 100 low-cost basis Bitcoin. We send them 96.5 back. That's the 3.5%. That 96.5 assumes today's cost basis. The miner can immediately sell it all for all their CapEx needs. At the end of the year, they can either repay their loan and get their original 96.5 Satoshis back, their low-cost basis Bitcoin back, because this is tax deferral, not tax avoidance, or they could just roll the loan to the next year, and they can keep rolling another 3.5% every year, send in, meanwhile, 3.5 Bitcoin every year for as long as they want. What do we get out of it, meanwhile? Well, we get 3.5% yield with no counterparty or credit risk because this is a fully collateralized loan. Remember, if our counterparty disappears or blows up or doesn't pay back the loan, we have all 100 Bitcoin of theirs, they only have 96.5 of ours. So of the 3.5% yield that we're generating, we give 2% to all of our policyholders, and we keep 1.5% for ourselves. That's how we make money. So this is a no-risk, fully collateralized way that we've solved the problem for low-cost basis Bitcoiners for us to get yield and pass on yield to all of our policyholders. And that's how, for that 35-year-old, 10 Bitcoin in premium pays 18 in death benefit and 8 extra Bitcoin, or an 80% return on his Bitcoin. 2% per year, we amortize out to age 100. So for a 35-year-old, that's 65 years of compound annual growth rate of 2% in Bitcoin-denominated terms. Mind you, it's in Bitcoin terms. Because if the dollar price of Bitcoin goes up over that period of time, then that 2%, which sounds small, is amplified by potentially orders of magnitude in dollar terms. The policy loans are actually a really interesting element of whole life insurance because you can borrow money against your policy. You can borrow up to 90% of the surrender value, so it's like a 90% LTV loan, and you're going to be borrowing Bitcoin. So the way it works is, let's say Bitcoin goes to $1 million one day. Instead of selling Bitcoin at $1 million if you want to cash or you want to diversify or move your Bitcoin into other assets, you're going to incur a huge capital gains tax relative to whatever your cost basis might be. Instead of selling Bitcoin, what you do is you borrow against your life insurance policy. So you log into your account at meanwhile.bm, you see your cash value, you see your available loan amount, which is 90% of the surrender value, and it's in Bitcoin, so you say, oh, I want to borrow 2 Bitcoin. Great, you send us a wallet address. We then screen that wallet, just make sure it's not going to North Korea, and we send you 2 Bitcoin to that wallet. At that point, Meanwhile is largely done, but you want cash. We don't do cash. We don't touch dollars. We're giving you Bitcoin. So what are you going to do? Well, you're going to take that Bitcoin to any exchange or broker that you might have a relationship with, and you're going to say, hey, I want to sell 2 Bitcoin. But they're going to stop you before you're allowed to, and they're going to say, where the hell did this Bitcoin come from, and what's the cost basis? You'll have a loan document from Meanwhile that says it comes from a regulated whole life insurance policy at the Bermuda-based life insurance company backed by Northwestern Mutual called Meanwhile. And it says right here that the cost basis of these Bitcoin, these are new different Bitcoin from the life insurance company that I borrowed in my policy at a new stepped up cost basis. The cost basis is established on the day I originated the loan. In this case, $1 million a coin. You might have bought Bitcoin at $50,000 a coin many years prior, but you're not using those Bitcoin to borrow. You're getting new different Bitcoin from the life insurance carrier at a new stepped up basis. So you have $1 million coins, 2 of them. You sell at exactly $1 million, limit order on an exchange. Your cost basis equals your sale price. There's no taxable event. There's no Form 1099. You have 2 million cash, you withdraw. Your death benefit was 18 Bitcoin in that example, minus 2 is 16. The interest rate on that loan is 3%. It's a low interest rate loan. But remember, the rest of your portfolio is growing at 2%, so really it's a net 1% delta. And you now have 2 million cash. You never have to repay the loan because it nets out of the death benefit. And you're never at risk of a margin call or a liquidation event because you just borrowed Bitcoin against Bitcoin collateral. You're borrowing from yourself, your loved ones, your family, whoever your beneficiaries are. You're not borrowing from an exchange. You're not borrowing from a lending desk. You're not borrowing from an insurance company. And your net death benefit went from 18 to 16. Remember, your premium is only 10, so you still have 6 more Bitcoin than you ever had to begin with. And you have 2 million cash out of it. This is how you leverage life insurance. This is called infinite banking in Bitcoin using life insurance. And don't forget, there is an inheritance component. This is life insurance after all. You're going to leave your family whatever Bitcoin you have left in your policy after all your loans. You can let that interest rate accrue. It'll never lapse your policy. At 3% on 2 Bitcoin, you can just let it grow and grow and grow, and your net death benefit will be, instead of 16, 15 point something by the time you die, maybe 14 point something, depending on how long you live. And the key for me when I got this policy was the fact that I now know that my wife, all she has to do to get my Bitcoin is not learn about custody and private keys and seed phrases. She just has to file a claim. She reaches out to me meanwhile and says, my husband died, he had a policy, what do I do? And meanwhile, we'll work with her in a white glove concierge way, hold her hand through the process. She might say, I don't even want Bitcoin, my life is in dollars. Well, upon death, you get a new cost basis, new Bitcoin. And if she doesn't want Bitcoin, meanwhile, we'll help her liquidate that Bitcoin at the new cost basis, tax-free, and wire the money to her. If she wants the Bitcoin, she'll give us a wallet address, or we'll help her set up a new wallet, and we'll send the Bitcoin there. Again, new cost basis. So all the complication of how to pass on your Bitcoin is removed when it's in life insurance, and it definitely takes a lot of the fear of, now that you're owning Bitcoin, what do you do with it? How do you hold it for the long term? Happy to take any questions. You could scan that if you want to get in touch with me. I'll be around all day. Over there.
Here you go. You described a scenario for a healthy young male. How about the aging boomer scenario with high blood pressure, high cholesterol, and diabetes?
Good question. We are a life insurance company, and we want to insure healthy individuals, younger the better. We insure people between 18 and 65. However, you can always own a policy on someone else. Remember, there are 3 parties to every life insurance contract. You have the owner, you have the insured, and the beneficiary. The owner can be a trust, it can be an entity, it can be an individual. The owner is responsible for paying the premium, but they also have access to the tax-free policy loans. Then you have the insured, 18 to 65. The younger and healthier you are, the bigger the death benefit. An 18-year-old female, 10 Bitcoin in premium, 26 in death benefit. A 60-year-old male, 10 Bitcoin in premium might be 11 in death benefit. Then you have the beneficiaries, individual, group of individuals, all your kids in equal splits, a trust, a charity, up to you. The beneficiary files a claim when the insured passes away. So we have a lot of boomers that are older than 65. They own policies on a child or a nephew or a niece, someone they have insurable interest with, and are able to spend their Bitcoin into their retirement through the form of the policy loans, the tax-free policy loans, and then transfer ownership in their estate and their will of the policy to someone else in their family upon the death of the owner. So you might get a policy on a child. It's not about the death benefit when you do that. It's about the tax-free policy loans. Anyone else?
So the Bitcoin that I would put into a policy, that's not a taxable event to me.
I don't give tax advice, but I'll tell you this. There are a lot of precedents that say that it might not be, it might be, it's really up to you. We don't issue Form 1099s or any type of tax form upon paying your premium. Because everything's in Bitcoin, we never sell Bitcoin. Think of it this way. If you get a new custody account at Coinbase, you move your Bitcoin into Coinbase, that's not a taxable event. You want to cancel your policy, your custody account, move it to somewhere else, not a taxable event. It's like taking $100 out of your left pocket, putting it in your right pocket, not taxable. There's also Bitcoin share class hedge funds. You can invest in Bitcoin in kind, and that's not a taxable event. And you can cancel your policy and get your Bitcoin back. And so while we're not giving tax advice, and I'm not telling you yes or no, there is no clear guidance from the IRS whether paying your premium in Bitcoin-denominated life insurance is a taxable event. We're the only company that does it. But ultimately, I can say that I have my own policy. I spoke to my CPA and got many opinions. And most people agree that I've spoken to and others have spoken to that it's probably not a taxable event. Anyone else? Yep. It's a non-MEC. A MEC, he asked if it's a MEC, which is a modified endowment contract. What that means is because we're paying your premium over 10 years, to be a non-MEC, a taxable event when you borrow your Bitcoin and get the stepped-up basis to, in policy loans, have it be tax-free. This is a non-MEC, a non-modified endowment contract, which means that it meets certain principles outlined by the IRS to allow you to borrow against your policy without triggering any taxable events. A MEC is established at the 7-year threshold. You have to pay your premiums over at least 7 years. Basically, what happened in the 1970s in America was wealthy people would get PPL, private placement life insurance, and put their yachts and mansions in a policy, and then on day 1 or day 2, borrow up to 90% of the surrender value of their yacht and mansion completely tax-free. The IRS realized that that's a huge loophole. They plugged it in the 70s. They created this thing called a modified endowment contract, which meant you have to pay your premiums over 7 years and have your surrender value slowly grow over time, and then you can borrow against the surrender value, not the full value upfront of your assets. So if you put 50 Bitcoin into a policy and then borrowed 90% of it tomorrow, tax-free, that does not work in America. And so the premiums are paid over 10 years in equal annual installments. There's no paid-up additions. If you want to get another policy in the future, you can always get a second or third or fourth policy.
How would you use this as a key man policy for a boomer?
Say it again?
How can you use this as a key man policy for a boomer?
You mean to say that you're getting a policy, like a business would get a policy
For like a business owner where the other investors want to be protected?
So we are working with companies. There's something called COLI or BOLI, corporate-owned life insurance, business-owned life insurance, where you can, as a business, get policies on certain key personnel, C-suite of a company. And we're starting to work in that arena as well. So a business can own key man policies on certain individuals, but there has to be rules, like you can't all be on the same airplane at the same time, things along those lines. But I'm happy to talk in more detail after this.